Good morning and welcome to Dubber Limited's the full financial year of 2022 results presentation. From the company today, we have co-founder, CEO and Managing Director, Steve McGovern, and the company's CFO, Peter Ciliano. Before I hand it over to the guys to go through the presentation today, which I'll run on my back end, I'll just remind you, if you did want to ask a question, please do so via the Q&A panel at the bottom of the screen, and we'll get to those post the presentation. Steve, Peter, I'll now hand over to you. Thanks very much.
Thanks very much, Simon. Good morning, everybody, and thanks for joining. Obviously, we produced our quarterly report at the end of June. What we'd like to do is give investors an idea of our annualized report, or give a detailed report on our annual performance, and also an idea of what's going on behind the scenes in the company, how we've invested our money, and obviously what's driving growth for the company as well. Simon, can we start on slide 2, please, Simon? Okay, now this is a catch-all slide that will be familiar to a lot of our current investors, but for those people who are new to Dubber, just very quickly, Dubber is the unique call recording and AI platform which is built to enable content from the networks of the world's leading service providers, i.e. telcos, carriers. Our customers are global service providers, and they carry billions of calls across their networks every day. So the Dubber platform was designed to actually work the same way as they work, their network. So it deploys, or as it's called in the industry, provisions our services in exactly the same way that service providers provide services to you as an end user. And it becomes part of the core network offering for the service provider. So we create value for carriers through unified recording and conversational AI as a core network service. On the slide, you can see that Gartner are stating that 75% of all calls will be recorded. This is not call recording as you know it, but it's captured. So there is compliance call recording, which obviously is where we have started in terms of transforming that industry to the cloud directly from a network. And a lot of our investment in this financial year has gone into the additional services for which we've got very, very strong demand. So when we say that, or when Gartner say that 75% of conversations will be recorded, the reality is that as businesses and even individuals look to improve the way they operate, gain efficiencies, people want insights. They want insights into the way their own life is working if they're an individual, and obviously businesses now, as COVID has proven, those with insights, those with the finger on the pulse are the businesses that succeed even in downtimes. So that is what we do, and we take basically a calling network, such as mobile network, unified communications. Every one of those calls has got content in it. We're the platform that captures the content and exposes it. And as you'll see from the rest of the presentation, we've been investing in not just call recording as product number 1, but in providing a list of services that will now enable the capture of that content to be turned into usable content-rich data. Next slide, please, Simon. Sorry, slide 4. Thank you very much. So what we'd like to do is just take you through the highlights, and then Pete will take you through the financial summary in a few minutes' time. All our key metrics in the year have grown. So we have increased our annualized recurring revenue, which for us is a look forward on what we have contracted for the year at any given time during a year. We've increased cash receipts and revenue substantially against last year, and our service providers and users continue to rise. We now have 580,000 subscriptions for our normal products and services. Behind all this, we've actually completed 3 quite transformational tasks, which I think for most companies, each one of them would be a significant achievement in its own right. So we actually completed a capital raise in July of $110 million at $2.95 per share. And we started deploying that in September. And the first thing we've done, the first achievement, is we've actually integrated 2 businesses, which is Speak and Notive, not just the actual business, the whole business, the people, and in particularly the case of Notive, the technology, which has enabled us to fast track our own business plans to serve the services that we're going to talk about here today. So integration of businesses that we've acquired is a major achievement, I think, for us in the last 9 months. The second thing we've done is we've doubled the size of our workforce. So we've now really filled all the gaps that we need in our workforce across product development, compliance, sales, security, administration, and finance. So every role that we need to fill, we've managed to do in the last 9 months. We think we built a world-class team. Hopefully some of you have seen some of those people on some of our video releases, etc. And again, to add 150 people is a lot of people in our world. When it's actually doubling the size of your workforce, it's a big task on its own. And again, for the team, I think that's been a big achievement during the year. The final piece, which is really what leads us into hopefully this financial year, is we've managed to take a technology, which is the note-taking technology, and actually build it into the Dubber platform and serve it to service providers in the same way that we serve call recording. So in other words, they can actually offer it as a pass-through. It's billed the way they want to bill it, it's provisioned the way they want to bill it, and it scales for them to put any amount of users on it at any time on their network and therefore into the platform. So I think all of those achievements in 1 year would be landmarks in themselves. We've actually managed to do it at the same time as growing our metrics. We arrived in December with the largest quarter of growth we'd ever experienced. By the time we came to reporting on it in January, the market had changed. We're respectful of that. But we have built out the infrastructure that will set the company in very good stead going forward. And if you compare the company's position today with where we were a year ago, the company is in substantially different and a much improved position in terms of its customers, its team, its technology, its opportunities, and its balance sheet. So it's a completely different situation a year on, and that's what we believe we've achieved operationally in this financial year. Next slide, please, Simon. Very, very quickly, the goal of the company is to get onto as many networks as possible. As I say, whether it's mobile networks, unified communications, there's been an industry transition. So obviously, everyone's aware that the pandemic caused a situation where families and businesses needed infrastructure that they're used to elsewhere at home when you're stuck in your own living room. And this, nothing was more important than communications. And we've seen the advent of Cisco WebEx calling, Microsoft Teams, Zoom, and Dubber's involved with all of them. So when we talk about networks, we're talking about mobile networks, traditional networks. We're talking about the new players in unified communications, such as the ones I've just mentioned. We've been very fortunate with Cisco to get what we call a foundation deal, where every time a customer signs up for Cisco WebEx calling, they automatically get Dubber as a standard feature or a version of Dubber. And we've made great headway with Microsoft Teams, which, albeit on a different commercial model, we've started to see what's called the Operator Connect service providers of Microsoft Teams, which are the Microsoft Teams telcos, choose Dubber as a embedded recording service because, again, it operates and provisions the way that they want to sell the service to their customers. So our purpose is to get onto as many networks as possible. We think that obviously AI should be on every phone. We think it will be on every phone, and on the networks that we're on, we're invariably the only platform that's connected to those networks, and we have never been churned off a network. So we have zero churn, so we have a significant moat in terms of our aspirations. And once we're on the network, once we capture the data, what we've done now with our team is build a production line of services and products for which there's substantial demand in terms of differentiation at a carrier level. So in the UK, for example, we deal with all the major providers. You could argue that if they're all connecting to the Dubber platform, what's the difference? Well, the difference is they've all got different requirements for the use of that data, different requirements for products. And for the first time, the company is in a situation where it can actually deliver them. And so where we lead to is we're realizing the potential of voice data as a service. So the essence of the company is, if you believe that a phone call and the conversation in it has usable data and content, we're the platform that exposes and captures that data on a network. And we believe there's limitless opportunities for monetization off the back of that data. Next slide, please, Simon. So every conversation becomes a source of value. If any of you are taking notes on this meeting today, we have tools that allow you to put the pen down and actually have notes taken for you directly from this call. and it will give you topic modeling. It will give you action items in the same way that you're making notes yourself. There are derivatives of this service. One of them we've announced recently with a company called Xero, which is the Microsoft Teams Operator Connect, where we call it Moments. And that's the ability to capture a part of a call on the fly and have it deliver value across the network in the form of a notification. And again, our product team, you'll see more of this coming with our carrier partners because it is a required service. So every conversation becomes a source of value, whether it's video, whether it's voice. There are other forms of communication as well. And Dubber is the recognized brand for service providers globally to deliver this. And obviously the network is the source of the call in the first place. Next slide, please, Simon. Okay. Now, building our foundation through partnership illustrates probably the journey of Dubber over the last 2 or 3 years. We started life providing wholesale service for call recording, and the carriers would take that wholesale product and go and sell it where there was demand. We've now, off the back of our mission to capture all communications across the network, we now have what's called foundation partners. Now, foundation partnerships are more than an embedded service. It's a commitment from the service provider to switch a version of Dubber on for every single user on the network, but also to have automated provisioning so that when a service provider adds, so for example, Cisco, when they add a customer to Cisco WebEx calling, that creates an account in Cisco WebEx. It also automatically creates an account in Dubber, gives Dubber access directly to the customer for us to market digitally through the application. And an example of that would be, for example, if it's 1 month storage that's given away free by Cisco, we can ask the customer if they want to increase the storage. And there are various upsell to what we call our normal average revenue per user type client. Next one, please, Simon. There's a list of carriers that we deal with. We have 175 of them. Again, this is maybe for people new to the story. We've deployed salespeople now, a sales team, as we put in our quarterly report, into Central and South America for the first time. We have some recognized leaders in the industry we've managed to attract. Fortunately, Dubber is regarded in the development community and also in the telco sales community as a destination company, because we're able to impact transformation, not just in one carrier, but across the entire sort of globe of network providers. So for people in the industry, we are regarded as a destination of choice, and we've put some world-class people, recognized individuals into our sales team in North America. Obviously, we believe long-term that's our largest market, and you can see an idea of the footprint. We still have a long way to go. We're only scratching the surface, which is exciting for us, to be honest. And our number one goal is to be on as many networks as possible. Next one, please, Simon. So what I'll do is I'll hand you over to Pete, and Pete will take you through the year's financial considerations, and I'll come back and just summarize at the end. Thank you.
Right. Thanks, Steve, and thanks, Simon, for the opportunity. And of course, thanks to everyone for joining us today. The first slide you're looking at there is the consolidated result for FY22. At a top line, as Steve mentioned earlier, operating revenue increased by 75% to 35.6 million, and operating gross profit increased by 21%. Now, it's important to note that all growth in revenue was organic for the year. There was no new revenue from acquisitions in FY22. We move on to the next slide. Thanks, Simon. Operating costs. So following the cap raise in July last year, the company set out to grow the footprint of the business across the world. And in many respects, this was reflected in the increase in costs. But having said that, it's important to note that gross margins on our underlying business, being call recording, have improved to 70%. And given the underlying cost mix, we're confident that this margin will increase as subscriber numbers increase, and in turn with an increase in platform utilisation. I'll now address a couple of the larger cost increases in our FY22 numbers. One of the strengths of our business is relationships. So when travel restrictions were lifted, our travel costs increased due to our customers demanding face-to-face contact again. The other big ticket item here is headcount. Across the world, Dubber's headcount increased by 139% year on year. With that, Overall people cost, including office space and tooling our staff, saw a large increase in that expense line. If we go to the next slide, thanks, Simon. Now, with the non-operating and non-cash expenses, I've separately shown share-based payments here because although it's correctly categorised as an operating expense for accounting purposes, I think it's important to highlight that it's a non-cash item. I'll explain this a little further. The value of our share-based payments expenses are particularly high as they were valued at the time of grant. The cost of share-based payments are then spread across the life of the options. And you'll see in the accounts that the share-based payments, although they're non-cash, they show an increase of 13 million to 19 million, reflecting that higher value at the time of the grant. In addition, you'll also see interest expense, and this is also a non-cash item in this case because primarily it relates to the settlement of the Speak acquisition and is merely a reflection of the time value of money. Along with that, the income tax benefit shown in the P&L is again a non-cash item, and it's again related to the Speak acquisition. If we move to the next slide, please, Simon. Yeah. Consolidated financial position, and we all know this is the balance sheet. The company closed with net assets of in excess of 135 million. That's up 129% on last year. This shows the strength of our balance sheet to support any ongoing growth. A couple of the quality assets to underpin our growth were the acquisition of Notive, which bolstered Dubber's solution offering, and the completion of the Speak earnout. Both of these have and will continue to give Dubber deep reach into its total addressable market. Next slide, please, Simon, thanks. Cash flow. Now, cash receipts are up 48% on last year to 29.9 million. Now, to put this into perspective, Dubber collected 29.9 million in customer receipts off the back of 20.3 million of revenue in 2021. That's 47% more than what was recorded as revenue. And at the risk of repeating myself from an earlier slide, the increase in payments to suppliers and employees line clearly reflected the rise in Dubber's team worldwide. Next slide, please. Thanks, Simon. Cash receipts. Okay, so the unique aspect of the Dubber business is that whilst we have 580,000 users, we don't actually have 580,000 customers. We engage with carriers, whereby our receipts can be impacted by extended payment terms along with the timing of those receipts. Whilst it's a requirement that we report cash receipts quarterly, the nature of our business and our customers is better viewed on an annual basis, as we've shown in the graph here. Notwithstanding that, we have recently implemented new processes around onboarding of customers, and one of those changes is to bring forward payment terms. And on that note, I'll hand you back to Steve. Thanks for your time today.
Thanks, Pete. So just to summarise, we're in a world where there's transformation in the carrier sector. Demand is growing for Dubber services as carriers shift from a connectivity provider to being a provider of content-driven features and services. We've delivered significant increases in both operating revenue and ARR and believe that this momentum will continue. As Pete explained, there's a lag between ARR and total operating revenue, and I guess that reflects the nature of our customer base. Large telcos, and due to the nature of these contract time periods, can vary between signing and recognising revenue on deployment. If a carrier, for example, takes a while to connect their what's called OSS and BSS systems to the Dubber platform, they may be contracted to actually pay us, but there's a delay in going live. We exercise discretion depending on the nature of that relationship as to whether we bill them immediately or give them some grace. And if you look at our quarterly reports, you'll see that through the year. So ARR is actually contracted revenue that customers are to pay us at any given time in any given year. And there will be some discretion at our end if a service is delayed in going live. So we're really confident about the strategic direction of the company. We're extending our current relationships, we're expanding our foundation partner program, and we're very confident about securing new relationships, which is still a major priority for the company as well. And so our network's got great value. We've got the products, the services ready to go, and hopefully we can deliver those insights on that to our shareholders in the very near term. As we said at the start of the call, we've invested in the core infrastructure required to meet demand and capitalize on the opportunity before us. We've integrated businesses, doubled our employee base, and deployed fundamental technology into our platform. We don't expect to be doing that every year, but financial year 22 has actually set us up for the future. Our investment during the year has ensured we'll be able to stabilize operating expenditure in FY23 with a model that sees revenue increasing at a faster rate than costs. We're fully funded to get to cash flow break even. It's a major goal of the company. One of my KPIs as a CEO, and the board hold me to this, is to make sure that the company is continually fully funded and that the revenues this year are growing at a faster rate than our expenditure. So this time next year, and again, as Pete would say, look at us on an annualized basis, we expect to be in a situation where the revenues are growing at a rate that's higher than the expenditure. It's been a great year for us. As I said, we're in a totally different position than we were last year. Last year, we had 100 employees, $20 million in revenue, and $30 million in the bank. Today, we've got over 240 employees, $36 million reported in revenue, with substantial contracted future revenues in our ARR figure. We've got additional product capability to generate revenues and a fully funded business plan with $84 million in cash at our disposal. The company is clearly in a much better position than it was last year. And at this point, I'd like to open questions, Simon, if you'd like to send them through.
Great. Thanks, Steve. Thanks, Peter, for the presentation. First question, just on direct costs. Can you explain why the direct costs have grown so much in FY22 from FY21? And can you please give some colour on what those costs are?
Well, we have with all our new clients, we've been had to service them, and some of the costs has gone into cloud-based costs mainly.
I mean, obviously, one of the things we've said is we talked about investing in future services and ring fencing the call recording services. So the increase in indirect costs applies not to the current revenues, but to the revenues which we believe we've got demand for going forward.
Great, thanks. Just a question on cash receipts. Cash receipts were relatively lagging compared to FY22 revenues. Has there been any progress in cash receipts for the 2 months since 30 June 22? And are the key laggards in payments, and will that improve?
Yeah, look, without disclosing any numbers at this point, the early indicators are that we will be well ahead of where we were in the June quarter for cash receipts.
Great, thanks. And just
to give some feedback, we have multinational carriers on payment terms which can be anything up to 6 months, and the payment terms themselves might be 120 days, but we get paid in 6 months. And I think historically, the delta between our revenues and our cash has stayed fairly similar. As we grow the revenues, that delta is getting slightly larger in terms of numbers, but we're very, very confident around our customers and receipts. We're not asking 580,000 people to pay us on a credit card. We're asking 175 carriers to pay for a service that is a required service that's core to their network. So we are, the business model itself is a moat, provides a moat for the company. The quirks of it are delayed deployments, delayed receipts, but come back to the ARR. If we're delayed by 3 months in terms of actually deploying a service, it's not a 36-month contract that we lose 3 months of. If you think about the services we provide, call recording is not a discretionary spend for the end users. It's a required spend, and call recording has a 7-year minimum for regulatory requirements. You've got to keep those recordings for 7 years. If you've got 100 employees in your organization and 10 of them rotate, we get typically 110 subscriptions the next year, because each individual, whether they're with the company or not, still needs to have an individual account that relates to recordings for compliance. We've got zero churn in our networks. We've never had a network disconnect the service. So we have absolute confidence in the way we construct our initial contracts to engage carriers in the first place. And we do give them attractive terms to get them on board, because we think that acquisition of network will give great yield over the long term. And that's reflected in ARR. It's reflected in, I guess, what looks like delayed cash receipts. It's actually the way we do business. It reflects our ability to go to a carrier and strike long-term accretive deals which are beneficial for the carrier and long-term, as I say, accretive for us as a company as well. Yeah. So does that answer the question, Simon?
Yeah, that's all good. Thank you. Next question, just in terms of investment in staff, you made a large investment in new staff, over 100% increase in employees, which we presume is for new products. Which quarter this year do you expect we will see revenues growing quicker than costs?
That is a question I wouldn't like to answer. I don't think you'd like to answer it either. Again, if you look at us on an annualized basis, I think that's the way to look at this company, whether it's our revenues, our ARRs, our cash receipts. We don't make decisions that impact the quarter. We make decisions that impact the annual performance of the organization because we're dealing with large carriers. Yeah. So I think, we're very mindful of the current macroeconomic conditions. We raised money. The mandate was to go and grow the business. I think we did that really, really well for the first half of the financial year. As I said at the start, when it came to reporting on it, the market had changed. So we are not so much pivoting as making sure that every dollar creates a winner. So we will continue to invest, but behind revenue. And I think it's important to know that. So when we go to a carrier, depending on what agreement we reach with them, we might invest in that relationship through sales, through marketing, putting people inside their business, but it'll be done on the basis that their investment into us is greater. And so I don't really want to commit to a macro position around which quarter this year we'll get to revenues growing quicker than costs. But that is actually the prima facie, business plan for this year to get to that position. Yeah.
Right, thanks. Can you just talk to the growth that you expect in headcount over the next year and what parts of the business?
I think growth in headcount now is minimal. So we've really transitioned. What the numbers don't tell you, I guess, as a business, and maybe we should tell you, is that if I turn the clock back to 2018, we did $1.5 million worth of revenue. In 2019, we did $5 million worth of revenue. In 2020, we did $9 million worth of revenue, and in 2021, we did $20 million worth of revenue. This year, we've done 36. So that got supported originally by a real bare bones skeleton team. It was a founder-driven business. We were selling and have been selling one product, which is call recording. We've now got much greater opportunities. The carriers need the services that we're providing for their own benefit. They don't want to make money out of data include. You think about your mobile, the two drivers for your mobile, apart from the device itself, are price and data inclusions. Well, the carriers need more than that now. So one of them, Optus locally here, we've announced a deal with on their mobile network, which currently is just for enterprise, or it's for banks, to be honest with you, and will get expanded when they modify the SIM service this year. The product director of Dubber actually used to be the head of digital for Optus. And what he was doing at Optus was transforming that business, or as part of a team, for what they call the living network. And the living network means that there's more to that network than the connectivity. Why has he left Optus to come to Dubber? He's left because what he was doing at Optus, he can now impact the whole industry globally with a platform that connects into multiple carriers, multiple networks within the same carrier, and multiple networks in the same country with different carriers. And that can lead towards network effects if you built the right products. So you could have a mobile with Telstra, fixed line with Optus, use Microsoft Teams and Zoom, and still have the Dubber services, whether it be note-taking, recording, insights across all of those networks. The value goes to you as an end user, with the network providers, being required to provide that service because you're demanding it. We're a long way from that. That's the goal. The products that we've invested in this year will get us there more quickly than we would have done if we didn't put those people on. So this year, it's filling in gaps. We've got enough players on the field, to use a sporting analogy. We may, like any sports team, need to swap a few in and out, but by and large, we've got the right number of players on the field.
Great, thanks, Steve. Can you just talk to what the gross costs for the company in terms of outlook are for FY23?
No, to be honest. Other than saying that our model is to have revenues outstrip those costs. I understand the question. I understand where it's coming from, because our costs have actually increased over the last 2 or 3 quarters since we raised the money. We're trying to point out that those costs are not directly related to the revenues that are coming in during the quarter as well. We've built for the future. We've completely changed the company, its infrastructure, its people, its product capability, because we've got demand from an industry that's one of the biggest industries in the world and is in severe transformation. And we're the platform that can deliver the differentiation that the carriers want. So we've invested in that. The direct costs relate to that investment, the growth in direct costs. And that's why we've been very, very careful to make sure we ring fence the direct costs relating to our core business, which is call recording. So we have a fairly fixed rate for call recording. I'll explain how that works. We have 9 instances of the Dubber platform globally, which forms one instance or one platform. Each of those 9 instances has, I won't say a fixed cost, but it's not a variable cost, it's an invariable cost. And the more customers we put into those instances, the greater the margin, because we're already paying for the platform in the first place. And the utilization of subscriptions against that will increase the margins for call recording. We've been investing, and it goes into the direct cost line, into transforming the Noted platform, expanding the Noted platform into Dubber, and all the associated services for which we believe there's huge demand for the next 12 months and subsequent as well.
Great, thanks, Steve. Just another follow-up question, just in terms of revenue outstripping costs. Just in terms of ARR is $60 million at June, which one would hope would mean that revenue would be at least 60 million, so up 70% versus 36 million reported.
Yeah.
Can you say, or are you confident that costs won't grow less than 70% in the first or second quarter? So basically what we're trying to say there is, in terms of
the first, or again, I understand the question. We have a really good balance sheet which we want to protect. We've got a great business model that's got high cloud margins once we get utilization of the platform, and we have customer demand. It's difficult for us to talk about quarter upon quarter when we've got customers demanding our services on models such as a foundation model, which we're prepared to co-invest into. I don't want to be in a situation where a British telecom are prepared to launch one of our products on great commercial terms, and it takes us to put an extra person inside BT or some marketing development funds, which we would regard as cost of acquisition, but really yield great return over the lifetime value of the customer. I don't want to be in a situation where we're having to think about what that might look like in the market. We're always thinking about what things look like in the market. What we are as a business is we're a unique platform that has a great balance sheet, wishes to preserve it, and has the opportunity to grow revenues at a faster rate than our costs will grow. We've invested, it's been a year of investment. We raised the money to invest. We raised the money to do acquisitions. We've pivoted away from acquisitions because of the relative valuations. There are a number of companies we've spent time, money, and resources on this year who want to join the Dubber journey. Great companies, really good companies. We can't do the deal. We won't do the deal because of market valuations. So we believe we've successfully pivoted to a point where we can demonstrate that even without M&A, which was one of the use of funds of the capital raise, we can actually grow organically off our core recording product, and that's before we even deploy the services that we think will lift Dubber to a whole new level. So difficult to commit on a quarter 1 and quarter 2 basis around percentage cost increases. We think we've stabilized the costs.
We've spent the money up to this point to get us to this position we're in right now.
Right. And just a question, just with regards to foundation deals, can you just talk to us around the logic of these? Are they capped and what access do you get to customers through them?
Yeah, I think that, actually this is probably one of the things that we probably haven't messaged fully to our investors as well as we could have done. So most investors, I think, would think that a foundation deal is an embedded service for every seat, and that's great. That is the basis of it. Foundation is a lot more than that. So when we go to a new wave, so we've announced a new wave recently. New Wave are one of the largest Microsoft Teams Operator Connect businesses in the world. They're based in the USA. So when they put a new customer on to Microsoft Teams and they're growing at an extraordinary rate, that creates an account in New Wave's billing system. It also creates an account for Dubber in the Dubber platform, so the user becomes a Dubber user as well. So part of the consideration on the part of a carrier, whether it be Cisco, whether it be New Day, which is the largest traditional carrier in Denmark, or whether it be Microsoft Teams Operator Connect service provider, is they're not only embedding a feature of Dubber as a standard feature on every seat going forward, but it's all automated. The provisioning of that seat is not them providing us a list of customers that we switch on. When they switch the customer on their network, they've already done the work. We insist on them doing the work so that it switches a customer on in our platform. That customer becomes a Dubber customer. We still bill the carrier for it. We don't bill the customer directly, but we have access to the customer. And the reason why we call it a foundation model is because just as Microsoft do through Teams, or Cisco do through WebEx, or Zoom do to every individual on this call here today, we have the ability to go directly to the end user through the application digitally to increase storage, to add features. These automatically will increase revenue for the service provider and for Dubber as the provider of that feature. So we carry on billing the service provider, but we have access to the customers as well. And we believe that gives us a huge addressable market on each network, or total addressable market of every user, and the ability to upsell at an exponential rate. That's the foundation model. So we're asking a service provider for quite a series of elements that amount to consideration. And that's why when you ask us about our cost structure going forward, we are prepared to invest in a British Telecom if it's prepared to roll notes out onto one of its networks. But we're investing into a contract that's accretive, and our investment is to support that revenue, the underpinning revenue, which is guaranteed.
Great, thanks, Steve. And just in terms of the foundation deals again, can you just talk to any traction that you're having with regards to the AI solutions?
Yes, so they're all a bit different at the moment. So Cisco was our first foundation deal, and clearly the biggest. And that's gone through various iterations of when we did the Cisco foundation deal. It wasn't what I just described. We literally just sold them an embedded service. It's taken 12 months to get Cisco to modify to what we call a foundation deal. And so with Cisco, they've got something called Dubber Go, which is 1 month's call recording. And so if you sign up to Cisco WebEx calling, you automatically get 1 month storage of call recording with a set of features that allow you to record calls, but really don't allow your organization to be compliant, which is 7 years storage, account management, administration layers, etc. So Cisco, now we're in a position where we can start, we have been upselling, and we get sales from Cisco directly from them through their channel, and also through our own activities every single day. So every day there are new Cisco customers coming on. So we know that the foundation model is working. We can get a lot more out of it, but it is working really well. In terms of the AI piece, Cisco at the moment are not pushing that. Xero, on the other hand, is all AI. So they've included a iteration of our notes platform to give them what they call moments, which allows you as an individual to determine a point in any call that you wish to capture. We're actually going to do an investor day, which we'll announce, where we'll be very focused on these products and services to give investors an idea of what the future looks like for Dubber. And so the Xero foundation deal is all AI. New Wave is a bit of both, call recording and AI, but both of them are nascent. We've only just announced them; they've only just gone live.
Thanks, Steve. That concludes the Q&A segment. I might hand it back to you for closing remarks and we'll finish up there.
Okay, well, thanks very much for the questions and thanks for participating. Just wish to reiterate, obviously it's dynamic times in the global market in terms of the macroeconomics. We are in a fabulous position in terms of our gravitas and demand for our services, unlike ever before. We have a balance sheet that we need to hang on to because the carriers themselves respect that balance sheet as well. It makes them want to do business with us. So it's not something that we're looking to, run down quickly. But we have made investments into the company this year. We don't expect to be investing the same way in terms of basic fundamental infrastructure because we've already done it. We put a new CTO and he's built a world-class team, and he's created for us in short order what he would call a production line of services that are ready to go, both when we want to push them and for the first time when carriers ask us for something. We're able to deliver it in an agile methodology quickly to our customers. The company's never been in that situation before. So I think we're really well set up for driving future revenues without significantly increasing our cost base. And that's what we've achieved in the last year. And we're very proud of what we've achieved. We would love to have bolted on an M&A acquisition or two. Couldn't happen. And I think we've pivoted to prove that we can grow organically at the same rate. So that's the year for Dubber. We will have an investor presentation, which we'll make you aware of. And obviously we've got the annual report coming out in September as well. So we look forward to engaging them. Thanks very much for your time.
All right, thanks, Steve. Thanks, Peter. Thanks all for joining.